lack of a better word, is good. Greed is right. Greed works.
Hello, everyone, and welcome to episode 29 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we had another upswing. We went from 70.4 trillion, I think, up to 80.8. And we're finally getting an easing policy, or excuse me, an easing interest rate. The policy's been easing for a long time, but the rate's not coming down. But looks like it's finally going to. We have made some money off of our commodities, and our stock prices are kind of steady, not really moving up or down. But with the interest rate going down, I think they will finally move up. And I think at this point, I would like to point out that even though our net worth is down from our peak of about 150 trillion, that this is the point at which it's about to take an upswing. Now, we've had lots and lots of difficulties in the last, half dozen episodes where our net worth was dropping. We were having problems with commodities where we had a lot of money tied up in them. And all of that's finally over. And at this point, there's basically just opportunity everywhere. And unfortunately, we don't have the ability to completely stop the ticker and take advantage of everything that the game is offering us. So for instance, with the interest rate coming down, the stock index should go up. We should be able to make money on stock index futures, on stock options, on buying and selling stocks. There's just no end to the different opportunities that we can take advantage of. Like, for instance, right now the short bond is all the way down to 4.84%. We could do some more short swaps so that when it goes back up, we make even more money off of swaps. And I think that's actually one of the ones that I am going to take advantage of. Like, for instance, buying options takes forever, and we have to have counterparties for that. So it's going to be difficult to take advantage of that opportunity. But on the short bond, there shouldn't be any trouble. The only thing we might have to do is to lower the notional amount that swaps are based on. Buying the index, same thing, requires counterparties, and there just aren't that many to be had. So I also discovered something else that's interesting in updating my spreadsheet. I noticed that the tax cost basis on a lot of our companies was not really going up. And I expected it to, because we'd been making a lot of money on commodities. But the thing is that we were buying physical commodities, not futures. And so it appears that when you make money off of physical commodities, the tax cost basis is not adjusted. And that is a good thing. And the reason why it's a good thing is because even though it gives those companies more cash that we have to deal with, it means that they will reach their target price without being affected by the income that they've made off commodities. Now, I'm not sure, and this is something that maybe if you know the answer to it, you can comment down below, but in some cases, a profit off of a physical commodity will affect operational income, and sometimes it won't, and it depends on the industry that the company is in. So for instance, integrated oil companies, if they make money off of oil futures or oil commodities, those profits are counted towards operational income. Whereas if they buy any other commodity like gold, silver, wheat, corn, those profits or losses will not affect operational income. And I haven't been able to, or I didn't take the time, I should say, to determine whether or not commodities that affect operational income also affect the tax cost basis. And if you know the answer to that question, please put a comment down below and let everyone else and me know if that's the case or not. But anyway, what we're going to do today is we're going to start with RakeM Insurance, and we're going to have him do a bunch of short swaps. With the interest rate this low, I want to get as many as I can. Right now, he has an abundance of long swaps and not enough short swaps, where he could lose money if the rate goes in the wrong direction. So right now, we're going to make only 2.2 billion because we're losing so much on these short swaps because of how high the agreement was for. So we're going to get a new set. And I think the counter offer will be just over 5% if I make this for the full length rather than 1 year. So like, let's have it start the first quarter of next year and go through 2026, because that's as far out as the current short bond expires in the fourth quarter of 2026. That's as far out as we can make it. Let's make an offer. Oh wait, did I hit long? I meant short. Okay, so offer 5.03. So anytime the short bond yield is above 5.03, we would make a profit. Because on a short swap, we pay the 4.84 and then we receive whatever the existing rate is. So when it's above 5.03, we would make money. All right, so I'm going to input as many of these as I can. We're also going to, we have one swap that we need to cancel with HeartMax, but except for that, I think we're good. We're going to put these in, and then I'll talk about what else we're going to do, because we're going to be basically buying a lot of stock today. I think we're going to be expanding into some new markets, but let me get these done and then we will deal with all that. All right, we're back up to 1,000 swaps again. That's the most we can have in the game. Let's go over to the company that we need to cancel one for, and that's HeartMax. All right, so Burlington Resources, we have an advance. We advanced him some money, and he cashed out his commodities, or at least enough that he can repay our loan, our advance. I'm going to recall the advance from him. Toyota has a bank loan that we need to take care of. Let's go to Hagemeyer. And despite all of Hagemeyer's wealth, he's got a 20% or just under 20% market share. And I want to add more assets here. So we're going to take a look and see if there's anybody we can buy or if we can grow. And there really isn't anybody of any size. These guys are all less than 0.2%. And growing is only going to throw the industry into a worse return, but the demand rate's pretty good. So I think what we're going to do is we're going to go ahead and grow at let's call it 24%, and see if we can't force Amazon to reduce his growth rate. And if we can't, if he's still doing this in January of next year, we will go ahead and freeze his loan. All right, so let's grow at 24%. And our management, oh, this is Mitsui. Tochu, here we are. Our management's reasonably competent, and we're spending 12%. Pop-ups, pop-ups, pop-ups. Okay. 12% is pretty high for being reasonably competent, especially when our nearest competitor is only spending 5%. So let's knock this down to 8%. And we have a lot of cash, so we can increase our dividend. Let's make it $1.60. Okay. What I had planned to do next was tell you what we were going to do with our stocks, but it looks like wheat is already up to above 450. So I'm going to just double check. I think we spent around 350. So we're going to go ahead and take the profit because that's about a 30% profit. I will go ahead and sell all of these off, and then when we come back, I'll tell you what our other plans are as far as commodities go, as far as prices, and then what we're going to do with our stocks. So let me sell off all this wheat, and I'll be right back. All right, so first let me tell you what my plan is as far as the commodities go. As far as crude is concerned, the prime rate is falling and the GDP growth is rising. So the price of crude should go up. And we've had, who is it? Burlington Resources growing at 20%. And everyone else is negative, and we now are close to like a 35% market share. So what we're going to do is we're going to lower our growth to a negative 10%. We're going to continue to spend this 21% to reform our management, and when he is, we'll lower it. But we want to stop growing here and start reforming the industry. We've got all these prices down now, and if we grow negative with the interest rate swaps kicking in, some of these guys should go bankrupt, and we'll pick them up when they get over to the bank. But we definitely need to reduce this to negative 10%. There's no benefit from doing that anymore. So let's grow at negative 10. Honestly, should have done this last episode when I sold off all the options. Okay, but the price of crude should go up with this falling and this rising. And with everybody downsizing in the industry, that should add to the price because the supply should be down. So what I'm going to do, and since this is not a guarantee, it's just what should happen. Other factors could affect this. So what I'm going to do is I'm going to buy physical crude, even though it's way high, higher than I would normally buy it. I'm also going to have Neck Peripherals and Berkshire Hathaway buy physical crude. I'm not going to mess with futures though. I'm just going to buy physical crude. Do that real quick and I'll be right back. Basically, I just don't want to risk any of the other companies. I don't want to risk their net worth on this gamble because it should go up, but it could go down. All right, so the next thing is, as far as gold is concerned, we're just looking for it to fall below 1100. Wheat, we're going to be buying it at 350. Corn, we'll buy it at 3 1/4, and all we're looking to make is $1 on each one of those. So we'll buy it 350 and sell it 450. Here we'll buy it 3 1/4, sell it 4 1/4. Silver, we're waiting for it to fall below 14. We want it to be at least, or at most, $13 an ounce to buy that. Wish I had waited on the short bond swaps. It's all the way down to 4.5 now. But anyway, what we're going to be doing with our stocks, which is the next big thing, what we're going to be doing probably for the majority of this episode, is we are going to go through and buy up any companies, any competitors that are selling at 80 or below 90% of their net worth. And we're going to keep adding to our market share until we have 40%. Once we have 40%, we're going to set our growth rate to a negative 10, and we'll leave it there until such time as our stock price gets to its target or we have other reasons to change it. And the reason for doing that is twofold. One, a lot of the markets are oversized. They have overexpanded beyond their capacity to make a profit. So part of it is to buy up all the assets we can and downsize the industries until the profits are back to where they need to be. And we will also look at starting to freeze the competitors for any industries that are continuing to overexpand now that the returns are low. So we're going to be adding assets in all of our industries. We're going to be freezing loans, and we're going to be growing at a negative rate. We're going to be downsizing until the profits return to a 20% to 25% level, and it's more stable. Okay. Now, when I updated my spreadsheet, he's no longer at his target price. What is he trading at? He's trading at 19. So I didn't update the highlight on this, but what we are doing, so why did I point that out? Oh, what we are doing is going to reform the industries. We're not going to reach our target prices probably for another 2 or 3 quarters. But at this point, with the market conditions the way they are, the prime rate going down primarily, it's going to help all of our stock prices. So we should start seeing, maybe not this episode because we're going to be buying and selling a lot of stuff, but maybe in the next 2 to 3 episodes, we will be looking to sell some of these off. Basically, this episode, I want to get through this list, and in the next episode, we're going to be adding new companies in new industries. So we'll start with household and personal products, work all the way down to tobacco in the next episode. And again, it's going to be the same strategy. We're going to look to buy 40% of the market and then start downsizing until the industries are in a good profit-making situation. We'll freeze any competitors that we have to. The bank's loan portfolio is up close to $5 trillion. 4.6, and that's big enough. We can cap it there. They need to start paying it down. All right, and we expect these rates to go back up. This prime interest rate is not going to be low for very long, so we got to get this done as quickly as we can before the prices rise. So we're going to be going to town today. All right, so let's go back over here. Let's start with Burlington. I don't think there's any that we want to buy. We've got pretty big market share already. I'm sure there's a few that are underpriced. So let's take a look. All right, so we've got a 35% share and we want to buy basically 5%. So we're all above 90. We could get Petrofina, I guess. He's 2%. Could maybe buy Conoco as well if we want to overpay a little bit. See, he owns 100. He's 100% public. So let's go ahead and buy and merge in Petrofina and ConocoPhillips. We're going to overpay just a little bit, but it's more important that we downsize the industry with how negative it is. So I'll buy these and I'll be right back. We already have him growing -10, so I don't think there's anything else that we need to do. I'm just going to check and see if we can lower this. Our closest competitor is spending 14%, and our dividend is pretty low, and we have extra cash. We're mediocre. Let's lower our R&D to 16% and give him a 60-cent dividend. between that and the interest rate coming down, we should get back up to our par value. All right. So that's it for him. Strong one. All right, let's go over to Itochu. Our market share here is way too big. We're not going to be adding anything. Just want to make sure he's growing at a -10. Got a big dividend, spending 12% on R&D, and we're reasonably competent, so that's perfect. Let's pay off our loan. And you see he no longer has options. Got some futures on the stock index that he sold short. He must have inherited that from somebody. Let's get rid of those, because I think the index is on the way up. Doesn't have any swaps to cancel. I think that's it for him. Corn's falling 3 1/4. Alright, so he's done. Toyota. Here we have a 30% market share, and we are not growing negative. There's nobody well priced, and we don't really have to grow negative unless we were going to buy somebody else. So I think we'll leave that just where it is. Let's just check on his management. Reasonably competent. So let's raise our R&D. Here's an 8%er. So let's make our R&D 10%. Got a 2% dividend already, so we're fine there. And this guy's still downsizing, so our market share will grow. Industry is improving. Yep. Okay, he's done. Let's go to Hagemeyer. Okay, here, Amazon is killing it, and he's running out of credit. And we could buy this one, Earthlink. We're growing at 24%. I don't remember doing that. We were trying to put pressure on this guy. So let's freeze Amazon. Let's freeze Baidu. These guys here are too small, they don't matter. And the growth rate is pretty good. So let's just freeze these two. And there's nobody else that we really want to buy. 19%. So I guess we're just going to grow, since we can't buy anybody profitably. So let's freeze Amazon and Baidu. Okay, that's all we need to do for him. What's our dividend on him? Okay, 2%. That's good. All right, let's go to Nomura. Corn shot back up. Gold is still not low enough. All right, Nomura has a 32% market share, and he's very capable. The returns are way down. So we can buy Scott Trade. And looks like that's it. Well, maybe Samsung Securities here. But we need to grow negative. Our R&D is fine because we're very capable, and we need to lower our dividend too. So let's start by buying Scottrade. And we'll go ahead and skip Samsung Securities. He's just too small. Doesn't matter. So let's grow at -10. And we'll make our dividend 40 cents. And that should do it for now. We could buy this one if he falls a little bit more. Goldman Sachs. Let's see how much we'd be paying. An extra $3 billion. Can afford that. $3 billion's not a big deal, especially since we're worth $625 billion. So let's go ahead and buy Goldman Sachs, and we'll downsize the industry even bigger. Paid 22 billion for that. Now we've got 40%. And let's make sure that we're still very capable. Okay, we've dropped to reasonably competent. So let's increase our R&D to 12%. And that should do it. Oh, let's make sure that we cancel swaps. Who was it that we added to our portfolio? Was it Hagemeyer? No, we didn't do it with him, but we did with Burlington. We bought something small with Burlington. Let's make sure we don't have swaps. Okay. Dayton Hudson's next. Here he is. He has a 36.7, well, 0.5 now. Market share, he's reasonably competent. There's nobody well priced to buy. The returns are fairly decent, so let's just freeze Costco. He's growing too fast. We'll freeze him and he'll have to slow down. Walmart we can leave alone. He's only growing at 10%, which is what the demand is. So as long as we freeze Costco, our industry should be improving. So let's go to the bank and freeze Costco. Next up is Real Networks. Yeah, see, crude fell. Only 3.2% market share, and we're very capable. If we don't mind overpaying a little bit, we can get Microsoft. So let's see what he's rated at. Reasonably competent. He's got large tax carryovers of 85 billion, so that's some more value that is not on his balance sheet. So basically we're overpaying 60 billion, but we get 85 billion in tax loss carryovers. So it's still worth it. So let's see how much cash Real Networks has. 95, so he doesn't have quite enough, but he's got credit, and we'll give him enough when we get done to pay that off. So let's buy Microsoft and merge them in. Okay, so the Antitrust Division of the Justice Department has denied it because Microsoft apparently owns stock in the shipping industry. Let's see, who do we have? We have overseas shipbuilders or ship something or other. Overseas Ship Holding. He has a market share of 43%. And we're growing at a -10. You get 56, so it must be Mitsui OSK that Microsoft owns. And we are not trading at our net worth, so selling him off is not really an option. What can we do? How much is Mitsui OSK selling for? I think what I'll do is I will buy this away from Microsoft. I'll pay the extra $2 billion or whatever it's going to cost. Then I'll sell it off. Then we can buy and merge Microsoft in. I will take a personal loss on that, but Microsoft will get the money, and then we will get the money when we buy Microsoft. Okay, so it's a multi-tier situation. All right, I had to pay a 30% premium. Oh, and it's denied too. I'm an idiot. I should have seen that coming. Oh, crap. What are we going to do? I guess we could have OSG sell some of its assets, but I don't like that solution either. I guess we're just going to live with it. Let's go back over to Real Networks. Nobody else really that we can buy. So I guess we're just going to freeze Oracle and Citrix, I think this is. Yep. We'll freeze those two and Lotus as well. And then we will grow at 13%. We need to raise our R&D too, so let's just grow at 13. Let's see what we need to raise our R&D to. Currently at 6. Here's one for 8. So let's make it 10. And our dividend, let's split him. Dividend needs to be 42 cents. Okay, so Oracle, Citrix, and Lotus. So he's done. And we sold off this wheat, I believe. Double check. He's got oil futures, but no physical commodities. Corn's getting down again. Falls below 3 1/4. We'll buy it. Crude's going down. Gold's inching up. And our stock index is climbing, as is our net worth. All right, so HeartMax has 30%. And there's a lot of good buys here. We can begin with begin and end actually with Intel. Everybody's already growing negative. So let's buy Intel. I believe HeartMax has a lot of commodity money that's still not being used. We have a large loan too, but let's buy this and then we'll put whatever we have left towards the loan. All right, I guess we're gonna have to pay the extra 4%. Or jump back up. Okay, let's go and check on swaps. Now we need to grow negative so that we don't become a monopoly should any of these go broke due to swaps. We'll grow at a negative 10. Spending 10% on R&D, and we need to raise our dividend. So we're reasonably confident we'll back off our R&D to 8%, grow at negative 10, and we'll give ourselves a dividend of, let's just double this to a $1.20. That looks good to me. And with everybody growing negative and our growth, demand growth positive, we should come out looking real good. Oh, okay, that's options. Options on Hagemeyer, and we're going to make a ton of money on them. 5 times our investment. And they're going to come due in December. So that's good. Okay, he's done. So next up is Fujitsu. 22%, and we're reasonably competent. Industry is worsening. And that's thanks to Lenovo, still growing like crazy. Alright, so we can pick up, for a little bit of a premium, Dell and Compaq. That's 15%, would give us 35. And looks like that's all we're going to be able to do. So we'll pick up Compaq and Dell, we'll grow at a negative 10, and we'll freeze Lenovo. Looks like we have enough credit to do this. We'll give him some money to pay off any loan that he has left when we're done. Alright, so he needs 70 billion, call it 80. We've sold the index short and it's rising, so let's cover these. Doesn't have any physical commodities, but he has options that he's losing money on. Well, oh, I have to buy, not sell. All right, so let's give him 80 billion. Okay, he's spending 9%. We are mediocre. So let's increase our R&D to 12%. Let's grow at a -10. Make our dividend $1.50. And then we need to freeze Lenovo. That should do it for here. We could freeze these two, but they're both smaller, so not going to worry about them, especially with our demand up. Gold's falling again, which is good. If he gets down below 1100, we'll buy some. Alright, so next up is United Technologies. Very capable and has 28%. And the only one worth buying, even remotely worth buying, is this one. But our returns aren't that bad, and nobody really has a ton of credit until you get down here to the 3%ers. So here, let's just freeze Lockheed Martin and General Dynamics. We'll set our growth rate to 8%. We're very capable, so our 6% is fine. And our dividend's fine too. So we'll just set our growth rate to 8% and then freeze these two. That should be enough. We didn't merge anybody with Fujitsu, right? Let's just make sure we don't have any swaps. All right, let's get rid of these. We merged him with Dell and Compaq. All right. Mitsubishi Electronics. %, share and very capable. And our earnings are dropping a little bit. From 42 down to 30, down to the 30s. So he's growing fast, going real fast, going real fast. So this is Samsung, Pioneer, and Toshiba. So let's increase our growth rate to 8%. And very capable, so I'll leave our dividend, our R&D the same. Increase our dividend to 40 cents, and then we'll freeze those guys. Who was the other one? Samsung, Toshiba, and Pioneer. Okay, that's it. Just those three. All right, so Toyota America is next. His earnings are way down, has 22%, and is reasonably competent. We may be able to buy Ford. It's going to be real close. And he's at 102 billion. Okay, so let's have Toyota buy Ford. Donate them to Toyota America and then merge them. Oh, he doesn't own 100% of Toyota America. So we'll have to do the reverse. We'll have to give Toyota America to Ford and then merge them. I think we should have given him the money first. Alright, so he's bought gold. He bought it at 2,500. What an idiot. Alright, let's get rid of that. Alright, let's look at his options. Losing money on Texaco. Lost 4 billion there. It's got stock of SoftBank, which pretty much just has cash. And he's losing money, so let's sell it. Alright, let's grow at -10. Because we have a 53% market share, and that's not good. Alright, so R&D, we are mediocre. So let's change it to 6%. And we'll make our dividend 35 cents. We're probably going to lose money for a little while. But if we grow to -10, we're going to be selling off something like $5 billion worth of assets every quarter. And we'll take that money and put it directly towards our bonds and loans. We're only paying 7.8%, so let's pay off our loan at this point. And next quarter we'll start buying back bonds. Well, gold shot up. So did wheat. Okay, so this is now Ford. And he has 53%. I'll fill in the rest later. Let's look at Diageo. Got 27%, and he's reasonably competent. Not a lot of good candidates. Oh, well, we could buy this one. Interbrew. He's losing money. Got almost enough money in cash to buy him. Let's do that. We also got Ambev here. Let's sell it. Give us some good tax loss carryovers. It's not listed here yet, but it should give us quite a bit. All right, we sold the index short. Let's cover that. All we have now is a loan, so let's give him the money to pay that off. Assuming Progressive has it, and he does. So we need 40 billion. Let's cancel swaps. Grow at a -10, and we'll freeze Heineken. And I guess that's it. We'll leave the R&D the same, 14% because we're mediocre. Let's increase it to 16. And we'll make our dividend $1.30. Let's go to the bank and freeze Heineken. And let's just make sure on Ford that we don't have any swaps. McDonald's is next, but I need to double check how much time we have left here. All right, looks like we have a little bit of time left, and McDonald's already has a huge market share, so shouldn't take us too long to look at him. At most, we'll have to freeze some people. But even if we were going to freeze some people, we may not want to do it just so that our market share continues to come down. Here the demand growth rate's really low. We're already growing at a -10. We can increase our dividend, and we're very capable, so we can lower our R&D to 6. So let's make our dividend $1.05 and our R&D 6%. Let's put our extra money towards the loan, and let's get rid of this reserve so we can pay off the rest of our debt. So the way you do that is you increase McDonald's earnings. And this money will be turned into cash, which we will then apply towards the bonds and the loan. Alright, that didn't take any time at all. Let's do one more. Let's go over to health management. He doesn't even have 20%, it's 15. Alright, Bank of RakeM earned $3.50 a share, 175 billion total, 196 billion from swaps. You just paid out a lot of money to depositors. Well, I was going to show you what he has, but this is health management. Go. He's got just too much cash on hand. Too much money on deposit. So we'd like to use that up. Oh, look at that. A little shot way up. Wow, and spot wheat's up almost to 8. Gold's up and everything's up. The only thing that's down is the stock index. It was at 14,999 a minute ago. Alright, getting back to HMA here. He's got 15%. He's mediocre. Spending 21% on R&D. He's real high because he's got major debt. See, that would be 36, and then if we added this one, that would be 43. Let's see how much he's worth. Holy crap. Holy crap, that's huge. Only worth 5 billion, and yet he's trading for 70. That's nuts. Alright, we're not buying him. He's trading a little too high. We buy Oxford Health. He's losing money on swaps like crazy too. He lost 614 million. So there's something else going on, because he's got a -2. He must have like lost money on swaps. I mean, not swaps, but options or something that just got settled. It's got to be what it is. All right, I'm gonna wait for that to bring their prices down, because that's just crazy. So. Here, we're growing at a -10. We don't need to do that. Well, we were doing that because our management was bad, though. The returns aren't great. I guess this is just one we're going to have to wait. We're going to have to wait for either he's going to declare bankruptcy, or his price will come down. Take a look at United Health. he's in a lot better financial shape. He's losing $1.25 billion, losing $3 billion here. He's made a lot of money on the index, but he's got it sold short and he's not covering it because he's still in decent financial shape. Got an A credit rating. Alright, so we're going to hold off on him as well. I'm not going to mark him done or anything. I want to go back and look at him, and we'll just skip him and come back. Alright, but we're running out of time for today, so I think we're going to end it here. I didn't get through all of them, but we did get all the major players. I had hoped to do more on the commodities today, but instead the prices just all shot up, so I guess we'll be holding off on all that stuff. Well, when we come back next time, we'll get through the rest of this list. We got through, 24 of our stocks, and we've got another 21 to go. So we should get them all done in the next episode, and then we will start buying some other companies in new industries. Alright, so that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.